The current market conditions will give you the current values. Yes, so the graph or the table, whatever it is. The 0.91 value is here. Now let me just zoom it here. Okay. Now do you see 65 call option here? Correct, Ashish. You're right. Absolutely correct. 65 call option, and this is the value of delta. All right. So did you understand now, Ramesh? Perfect. Now, Rameshji, check the put part and let me know if you understood the put part. And to understand the put part, forget the math that is shown here. The only thing that you have to look at is puts are negatively correlated. If underlying is dropping, put is going to go up. If underlying is going up, put is going to come down. But sir, how to check in this table about ₹1 increase? अरे भाई ₹1 increase underlying stock में होता है. ये टेबल सिर्फ ऑप्शंस के बारे में बताता है. ये टेबल में और ₹1 राइज होने का संबंध क्या है? Correct, Anand. You're right. There is no extension. Zoom table and explain. अच्छा अबरार आप ही explain करो यार. Let's see how much you have understood. ब्लैंकेट स्टेटमेंट मार दिया सब लोग. सर वापिस एक्सप्लेन करो. चलो यार ट्राई तो करो. ट्राई नहीं करोगे तो समझेगा कैसे? व्हाट इज नथिंग? Zoom table and explain nothing. टेबल छोड़ो यार. आपको सी प्रणब and everybody understand one thing. Forget the table. What you need is values of the Greeks. The software provides you values of Greek. Now whether you get the values of Greek in tabular format or single text format, how does it matter to you? You will get it from somewhere. I will give you value of delta, theta, gamma, rho, all these values. Now you tell me, what do you understand by delta? Abrar, nothing नहीं बोलने का. मैंने 10 स्लाइड खत्म किया और अभी आप बता रहे हो कि मुझे कुछ नहीं समझ में आया. That's incorrect. Towards the end you can't go and tell me I have not understood anything, because then the whole time is going to get wasted. You tell me, what do you understand by delta first? So tell me, what do you understand by delta? Abrar, you have to type fast. Ramesh, you have to type fast. Remember, the other instructors won't even bother you asking whether you've understood or no. They will just go ahead. By now, they would have finished theta and all. Yes, impact of script movement. Nothing to type. I asked you a question and you have nothing to type. My question to you is, what do you understand by delta? Abrar, do you have mic rights? Do you have mic with you? Can you speak? I can give you the presenter rights and you can talk. Yes, Rahul, what is script premium? Script movement, not script premium. Okay, guys, I think we'll have to go back. Okay, all of you, those who have not unable to answer, please read this first slide. यहाँ पे definition दिया है. All right, Abrar, no problem. अबरार ये पढ़िए और मुझे एक्सप्लेन कीजिए कि इसका मतलब क्या है. और अगर डेल्टा समझ में आया ना, बाकी सब इजी है. Or if you're not going to make an attempt, let me know, then I'll move ahead because I can't wait for so long. All right, let me go ahead because I am waiting for Abrar and Ramesh ji, and they are not answering. So if you are not allowing me to help you, I'm sorry, I can't really do anything about this. You are okay, Ramesh ji? You understood everything about delta? Okay, then tell me what is delta. I'm not asking gamma. Who is asking gamma? सब लोग आंसर क्यों दे रहे हो? गैमा के बारे में सवाल नहीं, सवाल डेल्टा के बारे में. Come on, Ramesh ji, tell me what do you understand by delta in simple layman's language? 11:30 हो गए, अभी तक 4 ग्रीक्स बाकी है. If price of an asset increase or decrease, delta measures this change in options premium. Perfect. So if underlying goes up by 1 rupee, the new value of option will be governed, will be done by delta. And if the underlying goes down, the new value again will change by the value of delta. Perfectly correct. All right. Let's move ahead now. So now is this, Ramesh ji, is this clear? Okay, now pay attention here. The 70 put premium is right now trading at 2 rupees 62 paise, and now the scrip has gone down by 1 rupee. Now tell me one thing, if the scrip moves down, what is going to happen to the put option value? Go up or come down? Go up. Go up by what amount? By the value of delta. Perfect. So let's see the 70 put option. This is 70, and when I go to this side, the 70 put option is minus 0.67. Remember, minus is for what? Negative correlation. So simply add 67.67 to 2.62. That's it. That's the new value of the options premium. Correct? Similarly, if the scrip moves down, should your premium go up or come down? A scrip goes up, your premium should move up or come down? Down. Down by what value? Delta. So 2.62 minus 0.67. That's it. Is this clear now, everyone? Just give me one moment. Delta was what? Delta as a measure. All right. So is this clear to everyone now? राहुल भाई, पहले सिंपल मैथमेटिक्स समझ में नहीं आ रहा है. आप डिफरेंशियल और कैलकुलस लेके आओगे तो मेरे को रूम बंद करना पड़ेगा. वो मैं समझ सकता हूँ, बाकी लोग नहीं समझ सकेंगे. चीजों को कॉम्प्लिकेट नहीं करना चाहिए, चीजों को सिंप्लीफाई करना चाहिए. That's when you will have success. All right. So what you said is correct. is the second order derivative. Gamma is the second order derivative of the underlying price movement. Delta is the first order derivative of the underlying price movement. Now, if this makes sense to people, well and good. Doesn't make sense, you are not missing out on anything. Don't worry. This only engineering or mathematics students will understand. That's it. ऊपर गया, आप इंजीनियर हो या मैथमेटिक्स के स्टूडेंट हो, नो फिर ठीक है, एंड इसके लिए आपके कोई पॉइंट्स कट नहीं होंगे. डोंट वरी सोनी. Yeah, this is mathematics, calculus. Exactly. पैसे बनने के लिए ये सब समझने की जरूरत नहीं है. जब ये सब समझने की कोशिश करोगे ना, पैसे नहीं बनाओगे. Yes, the delta value change is governed by gamma, Ramesh ji. You are absolutely correct. Okay, let's go. Delta. Now the third interpretation of delta was what? Delta as a measure of expense in the money. Okay. Now this is just a concept. We never use this. We never use. In fact, I have suggested OTA to remove this, because what happens is students are looking at this to see whether the stock is going to move or not move, which is incorrect. Okay, this is people's expectation. Remember, options has everything in options is about people's expectation, nothing else. Okay, now the 70 call option has a net delta of 0.22. So if you see here, this is the 70 call option. Okay, and this is the delta value. 0.22 means 22% chance that this strike will become in the money at expiry. Money means, does it have to go below the current market price? Has to go above 70, correct? No, Vijay, that is what is a myth. Option trading requires a lot of maths and calculation. Yes, calculation, but plus and minus. If that was the case, there would have been a prerequisite that to trade options you need to be a mathematics student or an engineering student. There is no prerequisite like this. It's a myth. Now, if in this same table, if you see what is this is 75. Can you see 75? नहीं रमेश भाई, उनके लिए कोई इजी विजी नहीं है. ऑप्शन जब स्टॉक मार्केट में सब लेवल प्लेइंग फील्ड पे है, वो भले डॉक्टर हो, इंजीनियर हो, मरीन इंजीनियर हो, मैकेनिकल इंजीनियर हो, कंप्यूटर इंजीनियर हो, फिजिक्स स्टूडेंट हो, कुछ भी हो, या अनपढ़ हो, सब एक ग्राउंड पे होते हैं, क्योंकि सब काम होता है यहाँ पे. साइकोलॉजी इज व्हाट डिसाइड्स वेदर यू विल मेक मनी और नॉट मेक मनी. Now 75 का delta 0.02 है. What does this mean? %2 chance to become in the money, which means 2% chance that the price will go above 75 rupees. So which means 75 is in the money or deep out of the money? Deep out of the money. Absolutely correct, Anand. Absolutely, all of you are great. Perfect, Ramesh ji. अब्रार भाई, समझ में आया कि नहीं? नहीं आया तो अभी पूछो, हाथ नहीं छोड़ूंगा तुम्हारा. डोंट वरी. क्राइम मास्टर गोगो जैसा नहीं हूं मैं कि कुछ ना कुछ मैं सब कुछ लेके जाऊंगा तुमको. डोंट वरी. So 75 call option has a delta of 0.02, which means 2% chance that 75 will become in the money at expiry. 2% chance. Which means 2% chance means the stock has to move. There is only 2% chance that the stock can go above 75 for that expiry. All right, Rahul and Manish and Deepa. What is net delta? अभी net delta किधर से आया? That's a delta value. Net delta means that's a terminology. Chandrasekhar, nothing else. Okay. Now notice the greater the cost of unit, the greater the delta, and therefore the greater the theoretical probability of expiring in the money. What do you mean percentage criteria for in the money or out of the money? At the money has 0.5 delta. That means 50% chance it can become in the money, 50% chance it can become out of the money. If you have a delta of 0.9, that means 90% chance that strike will remain in the money. That is the simplest definition of delta with respect to this. The second statement, notice that the greater the cost of the unit, the greater the delta, and therefore the greater theoretical probability of expiring in the money. So which means if you see what is the value here, last price is, okay, if you see here, this is 8.95, 77.5 put has a value of 8.95 premium and has a delta of 84, which means 84% probability of expiring in the money, isn't it? As the value of option value increases, the probability of it remaining in the money also increases. So it's nothing but it is like the Chandrasekhar. The in the money options have greater probability of remaining in the money, and out deeper out of the money options have lesser probability of remaining in the money. Deeper in the money, probability is high that it will remain in the money. Deeper out of the money, probability is high that it will remain out of the money, and low that it will become in the money. Okay. Now this is the last sheet of delta. Okay. Now this is only for information purpose. No nitty-gritties and details about hedging. That is there in proactive investor. It's not a part of this because we don't use hedging for trading. I want you to go through this. Very simple and straightforward. Just go through this. And let me know once you have completed and whether you have understood or also or not. Okay, Rajit is done. Anand is done. Okay, let me explain it to you. Don't worry. Okay, let's say we are comparing. So hedging is. Can you guys hear me? Okay. So when you are long 500 shares, that means you are long 500 hard deltas, because as your underlying goes up by 1 rupee, your PNL will also go up by 1 rupee. So are you long 500 hard deltas? Okay. So you have to hedge these 500 deltas. Hedging means you have to hedge 1:1 means hedge 500 deltas, correct? So if so whatever you lose in your stock, you should gain in your option. That is what is hedging. So your net value remains the same. Okay, now the contract size of a 70 put option. Okay, the contract size of a 70 put option is worth 250 shares. Normally what people would do, 250 शेयर का एक कॉन्ट्रैक्ट है, मेरे पास 500 शेयर है, तो मुझे 2 लॉट लेके हेज करना है, बराबर? ऐसा सोचते थे तुम लोग? Correct, but that is not how it has to be done. Yeah, that is not how it has to be done, because options have soft deltas, stocks have hard deltas, so you have to make use of this. Hold on, Shashank, hold on. मैंने अभी तक explain नहीं किया है. I knew this, so this question is there. You will come to know about that. Now we are looking at the 70 put option to hedge our position. All right, we are looking at the 70 put option to hedge the position. Where did that 70 come from? This is an example. Remember, this is an example. There's some assumption done. Now the 70 put option has a delta of 0.67. Correct? That means if the underlying goes up by goes down by 1 rupee, your put will go up by 67 paise. Is that correct? And vice versa. Okay. Now per share we are going to make 67 paise. So for 250, how much are we going to make? 250 into 0.67. That is 167.5. So which means if you bought one lot of 70 put option, it can only hedge 167.5 shares of your holdings. Got the point? If one lot hedges 167.5, how many lots will hedge? 500. That is 500 divided by 167.5, which will give you 3 lots. So once you buy 3 lots of 250 put options, 70 put options, you would hedge exactly 1:1. 3 lots means 750 shares. 750 into the value of delta gives you 502.5 shares. So which means with 3 lots your hedging is 1:1. Understood? Hold on, Ashish, I'll come there. Hold on. Abrar and Ramesh, did you understand this? Perfect. Okay. Now you will say, now once the correct, Divya. Now, if let's say the stock starts coming down from that supply zone where you have hedged your stock position, so as the stock starts dropping, is your put option going to go up in value? And as the put option goes up in value, that means its delta is also changing. So as the delta keeps on changing, keep on doing the same math. The moment you need only two lots to hedge 500 shares, square of one lot. तुम लोग मुझे एक्सप्लेन करने के लिए देते ही नहीं हो, इसलिए तो. So Bhavya, let's say when you hedged it the first time, you needed three lots. Okay, you needed three lots, and there was some specific delta value, that is 0.67. Okay, now as the stock starts dropping down, your put option will keep on increasing in your value, correct? So as the put goes up, will the put delta also change? So let's say after a certain drop, the put value now becomes zero point 0.8. So each lot is going to hedge how many shares? 200 shares. Okay, so let me take maybe zero point 0.9. Okay, so point, yeah, you square off one lot. So now you need only two lots to hedge it. Sushil, I told you, right? All these nitty gritties are a part of proactive investor. So keep on modifying your lot size till you hit a higher time frame demand zone, and or exit your underlying stock position. Depending on the delta value, Ashish. It depends on the delta value. So if the delta value is sufficient to have only one lot as a hedge, then you use only one lot. But the maximum here could be around two lots, not more than that, not less than that, because we have 500 shares. Yeah, then you will need four lots, right, Ashish? Because 250 shares means 125 shares. One lot will only manage 125 shares. To manage 500 shares, you will need four lots. Correct. Deciding the number of lots is going to be dependent on delta. How does it matter? Be it futures or be it spot. Futures and stock both have hard deltas. The math will not change if you're using futures or if you're using options. Stock. It's still the same. No, sir. Future. Yeah, yeah. Okay, okay. Maybe you're right. Correct. Yeah, Ashish. Talking about futures. No problem. No, Omkar, that doesn't make sense. Because when you select far in the money options, right, getting in and getting out becomes very difficult because the spread is very huge. Hedging will only ensure that your capital is protected. It does not give you any profit or anything else. What to protect from gaps up and gaps down, M. Chandra? Anand, this is not a part of options trading. This is only an example from Delta topic. As I told you earlier, we are not going to get into the nitty-gritties of this. It is going to be covered in Proactive Investor. Yeah, so that's why you want to hedge. So you will hedge every day. Stop loss is like stop loss, Rameshji. The same stop. There is no stop loss in Delta. There is a stop loss in the options premium. And in option trading, the stop loss is based on the underlying stock. So if your underlying goes for a stop, you have to exit from your options trade. Yes. Now this is the concept of dynamic leverage, which I want to explain to you. Okay, so just pay attention here, guys. And even if you don't understand, right, do not worry. This dynamic leverage phenomenon is something that happens automatically. We do not make it happen, and it is only applicable when you're long options. Okay, so just from a conceptual point of view, understand this. What I'm going to explain to you is this part, this second part. Prasanna, it's totally, if I have to use crude language, it is totally BS. What are you going to hedge as a new options trader? How will you hedge options? Using what you will hedge options? You will hedge an options trade using stocks or futures? Options are used to hedge stock position. No, Divya. In Trade Tiger you can't. In other platforms you can. मेरे हाथ में थोड़ी है गैप अप गैप डाउन स्टॉप लॉस गया तो गैप अप के टाइम पे जब खुलेगा तब जो है प्राइस उस पर निकल जाओ नो देर इज नो फॉरगेट ऑर्डर विल कवर दैट टॉपिक लेटर ऑन धीरेन्द्र जी पहले मेरे को मैं ये एक्सप्लेन करने दो नो इनोवेटिव है तुम लोग ग्रीक से स्टॉप लॉस कैसे क्या डिनोट होगा okay all of you now pay attention and no questions okay till I finish this. Now what I am going to compare is I'm going to compare two things. Okay, one is a script position versus an options position. Okay, so we at 200 the stock price, the stock is trading at 200 rupees, the stock is trading at 200 rupees, and I bought 100 shares. Okay, I bought 100 shares. At the same time, someone else bought a 200 call option at rupees 15, and the lot size is also 100 rupees, 100 shares. Okay, is the problem statement clear? Okay, now when the stock moves from 200 to 201, how much will you add into your PNL? Remember, you own 100 shares. Hey, Manish, how 55 hai? I'm talking about the stock position. You have 100 shares with you, stock underlying goes, the stock moves up by 1 rupee, your PNL will also move up by 1 rupee, right? 100 rupees, that is 1 rupee per share. Then similarly, when you move again from 201 to 202, you will again add 100 rupees to your P&L. So on and so forth. Is that clear? If it goes down, you will reduce by 100 rupees because stocks have hard deltas. So each and every share is participating in your P&L, correct? One share, 1 rupee, 100 share, 100 rupees straight away. Each and every share is participating. All right. Now let's come to this. Here we are talking about 200 call option when the script is trading at 200. So when the script is trading at 200 for the 200 call option, is it in the money, at the money, out of the money? At the money. At the money has deltas approximately 0.5. So the delta is 0.5 and the gamma value I have just assumed for calculation purpose. Okay, so the gamma is 0.05. Now delta is 0.5 means how many soft deltas we have in this lot size of 100? 50. Okay, now the option value is 15 rupees, the delta value is 0.5 rupees, the net value is how much? 15 into 100. Is that what you paid? That is what is the current PNL, correct? So that is the value here. Okay, now let's say the underlying moved up from 200 to 201. What is going to be my new options premium? It will go up by the value of delta 15.5. The initial value of delta is 0.5, so it will go up by 0.5 Deepa, not 0.55. Correct. So now, and once the underlying moves, is my delta also going to increase by the amount of gamma? So my delta will become 0.5 plus 0.05. It is 0.55. Correct? So now my net value is how much? 1550, because the option value is 15.5 into 100. So originally I had put in 1500 rupees. Now the options value has become 1550. What is my net profit? 50 rupees. So stock was giving you 100, but the option gave you 50 rupees. Correct? That is because of the soft deltas. Now, for every rupee rise, your PNL, now for the first rupee rise, your PNL has changed by 50 rupees in the options case. Now you can look at it in two ways. One way is each share is participating 50% or 50% shares are participating full speed. That is 1 rupee has been changed in the underlying. So your option premium has changed by 50 into 1 because the delta value is 0.5. Or 100 shares are only moving half a rupee. So this statement is that delta changes as the underlying moves, representing a percentage of participation in the underlying movement. So when the delta is 0.5, it means that 50% of my shares are participating when the underlying moves and the other 50% are sleeping. Got it? Now, as the stock keeps on increasing, your option value will also increase and your delta value will also increase, isn't it? and your PNL will also increase. So now if you see, your PNL has changed by 55 rupees, which means 55% of the shares are participating now. Correct? 55% shares are participating. Now, gamma will also keep on increasing, Ashish, but for all practical purpose, consider gamma to be the same because it doesn't affect us so much. Gamma value will add at every increase in the underlying price or decrease in underlying price, it will reduce. Deepa. Yeah, this is just for explanation purpose, Ashish. The dynamic leverage effect. So if you see, initially only 50 shares are participating out of the 100, then 55 are participating out of the 100, then 60 are participating out of the 100. So as the stock moves your favor, is your participation increasing? And similarly, as the stock goes against you, is the participation in the move reducing? This is what is called as dynamic leverage, and this is a phenomenon that you cannot observe using naked eyes. It automatically occurs when you're long options. So this only will happen if you're long a call option or you're long a put option. This is not applicable in short options. Now this is just a phenomenon that you have to understand. It doesn't affect our day-to-day life. So that's why a lot of times you will see, if volatility conditions are correct, the options position will always give you a better reward to risk compared to a stock or a futures position. Because Amit, when the underlying drops, will your delta decrease? So your delta decrease, that means your participation is also reducing, right? Because your participation is correlated with the delta value. All right. Now, is dynamic leverage clear? Okay. And even if somebody is confused, do not worry. You don't have to completely understand. No, in the money option, it's not in the money option doesn't mean that 100% the delta is 1. No, delta is always 1 for deep in the money only at expiry. See, delta can only be 1 at expiry. Okay, so slightly in the money will never have deltas of 1. It might have delta of 0.6 or 0.65 or zero point 0.7, not more than that. No, why will participation decrease if price is stable? If price is stationary, delta won't change. So delta won't change, participation won't change. Alright guys, everybody's okay with this now? The inference we draw is, options provide you two kinds of leverages. One is the regular price leverage. Like the same asset size can be controlled with a lesser amount. Like if you buy one call option, which is 1000 shares and 10 rupees, you need only 10,000 rupees to control a list, let's say contract size of about 5 lakhs, larger asset size. And along with that, this is an internal effect of options, which will give you a better reward to risk ratio. Got it, Rahul? All right. Do we deserve a break now? Okay, guys. 15 minutes break and then we'll be back. More Greeks. Let me see. The premium will decrease. All right. Welcome back, everyone. Can you please confirm if you can hear my voice and see my screen? All right. Let me see. The premium will decrease when the underlying price remains the same. What is the scenario? This scenario will understand only when we complete all the Greeks, Chandra. Okay? All right. So everybody clear with delta? So basically, delta is nothing but it tells you what is going to be the new premium value provided a 1 point change in the underlying. So if it's a call option we're talking about, underlying goes up by 1 rupee, your premium will go up by the value of the call delta. Underlying goes down by 1 rupee, the premium will go down by the value of 1 delta. All right. Okay. So now this finishes delta. This I'm going to start tomorrow only, not today. We will today finish all the Greeks. So today we will learn the remaining Greeks, and after that we will go into these parts. Okay. More Greeks. All right. Let's go ahead. The purpose of using Greeks with options, they allow us to measure how parameters such as stock movement, time passage, volatility changes, and interest rate changes might affect the price or value of an option. Greeks give us a better and greater understanding of risk and behavior. They make our life easier and are calculated using theoretical options pricing models, and they are used to fine tune constructed trade positions in order to execute smart options trades. All right. So we have total of 5 Greeks, but we are only concerned with the first 3 Greeks. These Greeks are not directly concerning us. You know the reason. The gamma is the rate of change of delta, so directly we don't get into gamma only helps us with the dynamic leverage part, and rho is interest rate, and since interest rate don't change so often anywhere in the world, okay, they don't change so often, so we don't need to be bothered about this, but we are going to stay anyways cover this topic as well. Now this is a revision of delta. Delta measures the change in the options premium given a 1 point change in the price of the underlying asset. So again, these are the different interpretations of delta. Delta changes as the underlying moves because of gamma, isn't it? So underlying goes up by 1 rupee. Will your delta also change? Yes, so that is because of gamma. When long options, the net delta increases as the script moves in your direction and decreases, creating the effect of holding more shares. And when the script moves against you, the net delta decreases, creating the effect of holding less shares. This phenomenon creates a dynamic leverage. Just give me one moment, guys. As the price of the as the underlying leverage effect, Kapil, as the underlying moves because of gamma, isn't it? So underlying goes up by 1 rupee. Will your delta also change? Yes, so that is because of gamma. When long options, the net delta increases as the script moves in your direction and decreases, creating the effect of holding more shares. And when the script moves against you, the net delta decreases, creating the effect of holding less shares. This phenomenon creates a dynamic leverage. Just give me one moment, guys. All right, sorry about that. Dynamic leverage means dynamically shares will get added, dynamically shares will get reduced as the underlying keeps on moving up and down. Yes, whatever I have explained here. This is the dynamic leverage effect, Kapil. Is there anything that you haven't understood in this? And if you don't understand dynamic leverage completely, right, it doesn't really matter, Kapil, because it's a phenomenon that is not visible by naked eye. Okay. And it can be seen as an approximate measure of probability for the options to expire in the money based on current market conditions. A call is positively correlated. As the price of the underlying rises, the call premium rises. As the price of the underlying falls, the call premium falls. Calls have positive deltas ranging from minus plus 0 to plus 1. Far out of the money calls will have deltas approaching 0. Far in the money will have options having will have deltas approaching plus 1, and at the money will have a delta of approximately 0.5. Similarly, a put is negatively correlated to the script price, and as the price of the underlying falls, the puts premium increases, and as the price of the underlying rises, the put premium also falls. Puts have negative deltas ranging from minus 1 to 0. Far in the money, puts have deltas approaching minus 1. At the money, puts have deltas approaching minus 0.5. And far out of the money, puts have deltas approaching 0. Now, why is the minus sign here? Because of the negative correlation. Correct. Now, this is the same example which we have covered. So, is everybody comfortable with this? And this, and the hedging part. All right, let's go to the next Greek, that is theta. Theta measures the change in the options premium given a 1 day of time passage. All right, so what does theta tell you? So you know that options are a wasting asset class. The time value reduces, correct? Who is responsible for reducing the time value? They're all the other parameters, but if nobody does anything, theta will definitely reduce time value component. Theta will definitely reduce time value component. What exception, Arun? Okay. So theta tells you the change in the expectation. Okay. Theta measures the change in the options premium given a 1 day of time passage. So if 1 day goes, if everything else remains same, the underlying doesn't move, people's expectations don't change, interest rate doesn't change, and nothing changes, only 1 day passes. So tomorrow's options premium will be today's option premium minus the value of theta. Is that clear to you guys? That's how simple theta is. It just tells you with every day passing what is going to be the value of, what is going to be the new options premium value. Yes, it is always going to be minus. You're always going to reduce it. What is 1 day nearer to expiry, Mr. Suresh? No, no. Every single day it happens, Suresh. The only thing is the amount is going to be less if there is more time to expiry, and the amount is going to increase as we are getting closer to expiry. That's it. Theta invariably works every single day. Okay, every single day theta will work. The only thing is the value of theta will keep on becoming bigger as we are closer to expiry, and if you are far from expiry, the value of theta is going to be extremely less. Got it? One every single day, calendar day. Amit. Okay, interpretation of theta, just go through this slide. Yes. So as time passes, the option will lose value because the time value component of the option is decaying, correct? Do you guys agree with this? Okay. It will become zero at expiry. That's an inherent characteristic. Now, theta is not constant, not linear. So, more the time to expiry, more the time value, isn't it? This is time value and this is time. So, if you have more time to expiry, there is more time value. More time value, less theta value. more time value, less theta value. Got it? Less time value, yeah, less time value, lesser value of theta. The closer we are to expiry, the higher the value of theta. The closer we are to expiry, the theta is going to be higher. Yes, so theta will keep on increasing as we come closer to expiry. Okay, remember, more the time value, lesser the theta. Lesser the time value, more the theta. More time for expiry, lesser theta value. Lesser time for expiry, more the theta value. Because what is theta's job? To reduce the premium, the time value component of the premium, so that at expiry the time value will become zero, isn't it? So it's like एग्जाम को बहुत टाइम है अभी तो आज आराम से पढ़ाई करेंगे, but the moment we are closer to the exam, our the amount of time we spend on reading is going to go up, right? That's how theta works. More the time to expiry, lesser the value of theta. Lesser the time to expiry, more the value of theta. That doesn't matter, Amit. I'll come to that once we complete all the Greeks. You'll come to know this. Okay? Your question is valid. I'll answered when I complete all the Greeks. Yeah, so that's why it is favorable for option seller to sell options that are closer to expiry, and we buy options. When we are buyer of options, we buy as far as possible so that the theta impact, the time decay impact is reduced. Because when you're buying option, what is going to go against you? Is it time decay? When you buy an option, time decay is something that will happen and is going to be against you, correct? To mitigate that risk, we go as far as possible because we know that the farther the expiry, the lesser the theta impact. And that's why when we are buying options, we are exposed to theta's issues. To mitigate that theta issues, we go 90 days out minimum. And when we are selling options, we stay as close as possible to expiry. Why? Because theta is higher and will reduce the premium at a faster rate. Does it make sense now to you, these rules? Yeah, 60 days, generally 45 days minimum is available, Rajiv, as of now. So when I started, it was the front month were also not liquid for a lot of stocks, but now the front month is liquid and some good stocks you get 45 days. Okay. Now, theta correlation. Options, both calls and puts, are always negatively correlated to the passage of time. Yes, Rajiv, I am going to share that with you. Don't worry. Theta is negatively correlated to the options, both calls and puts. Okay. They all decay. If you buy an option, it is going to decay anyways. So when buying options, theta is always negative. Time is your enemy. You bought options that are decaying. When selling options, theta is always positive. Time is your friend. You sold options that are decaying. Does that make sense to you guys? Abrar and Ramesh, Suresh, Bhavya. Okay. The longer an option has still expiry, the less its price is affected by time passing. That is why we buy only 90 days out options and we sell only 60 days. And theta only affects the time value component of an portion. That is why, in order to lessen the exposure of time decay, we use in the money options when buying them, or in order to maximize the exposure of time decay, we use OTM options when selling them. This is nothing but the same thing that I explained a while ago, that when we are buying options, we are buying something that is going to decay. And to mitigate the risk of time decay, we will go as far as possible. Why do we go as far as possible? Because when more time to expiry, lesser the time decay, that is lesser the impact of theta. And why do we buy slightly in the money option? Because time decay only impacts the time value component, it never impacts the intrinsic value. The intrinsic value, that's the reason why when we are buying option, we buy something that has slight intrinsic value. Correct. And when we are selling, we sell options that are closer. Why? Because we need underlying price movement और far month near month का क्या संबंध है? Underlying price movement and far month options, they are all correlated, don't worry. Okay, so now you understood the rules of 60 days or less and 90 days or more. They are all logical and sensible rules. And when rules are logical and sensible, you will hardly find me breaking them. Sony is aware of that. Yes, Sony? Absolutely, Anand. See, remember one thing. When you go, when you are buying or buyer of options, the only dangerous enemy for you is theta, because that can actually mess up with your trade. Now, can you tell me, when a stock hits a monthly or a weekly demand zone, will it immediately move out of that zone? May or may not. Okay, so there is a may or there is a may not. May, if it does, we don't have any problem. Okay, but if it does not, then theta is going to eat. If you bought something that is going to expire in the front month, theta is going to start working faster. So you bought something that is already starting to decay, and but the decay is going to be at a very very slower rate when you go far month. Please, I want you guys to just go through this example and let me know once you're done. No, forget the table. You don't have to bother about the table. All the values are already provided here. So don't worry about the table part. Go ahead, Anand. Yeah, ask your query, Anand. No, Anand Jamdar has a question, not Anand Tauri. Will the sum of all theta equal to 100% over product time adjust? It's a variable, Pudupet. Nothing of that sort. No, that 8.09 is nothing but 0.7. 70 paise is 8% of 8.65. That's the math. No, this is what you basically what this tells you is the November 12 weekly option provides a theta of 70 paise. Okay, for a 8 rupees 65% paise option. Time decay impact is 70 paise of 8.65 is nothing but 8%, right? Yes, Ashish. Theta will also change every day. We don't have theta also has a second order derivative like gamma, but we are not interested in that. So everything, even Vega will have. Yes, so funny, Renuka percentage so as we are closer to expiry, the amount that gets reduced is higher. नो आनंद ऐसा नहीं सोचने का ना इसको मैं क्या बोलता हूँ मेरे लैंग्वेज में क्या पता है बिकॉज यू आर एंड आई डोंट ब्लेम यू बिकॉज यू आर न्यू टू ऑप्शंस in the crude language that I use if you think that ये ऑप्शन बहुत महंगा है तो आई से that तुम लोग चिंदी हो इसको चिंदी सोच बोलते हैं फाइनली पैसा उतना ही बनेगा या शायद ज्यादा बनेगा अगर आप फार मंथ लोगे तो द रीजन वी गो फार मंथ इज नॉट बिकॉज द ऑप्शन ये नहीं सोचने का कि ऑप्शन एक्सपेंसिव मैं क्यों बाय करूं ऑप्शन ट्रेडर ऐसा कभी नहीं सोचता ऑप्शन ट्रेडर कैसे सोचता है मेरे ट्रेड के लिए रिस्क क्या है उसको मैं मैनेज कैसे करूं ऐसे सोचना चाहिए तो फिर आप पैसे का सोच दोगे छोड़ दोगे कॉस्ट ऑफ द यूनिट यू विल नेवर थिंक नेवर थिंक लाइक दैट ऑल राइट यू टू ऑलवेज थिंक दैट वे कि मेरे ऑप्शंस ट्रेड में रिस्क क्या है व्हाट इफ द स्टॉक डजंट मूव देन हु इज गोइंग टू किल माय प्रीमियम ओ इट्स थीटा तो उसको कैसे मैं मैनेज करूं थीटा अभी फ्रंट मंथ में तो बहुत ज्यादा है बट आई नो दैट अजित सर ने बोला है तो जितना फार जाओगे उतना थीटा का इम्पैक्ट कम रहेगा तो लेट्स गो फार मंथ फिर देखोगे इसका प्रीमियम तो ज्यादा है बिकॉज टाइम वैल्यू कॉम्पोनेंट ज्यादा है अरे टाइम वैल्यू कॉम्पोनेंट ज्यादा है तो क्या हो गया जब बढ़ेगा तो भी वो रेट में ही बढ़ेगा वो when the stock starts moving right the impact is higher on the far month option than in the front month option remember that okay does that make sense to you guys is there anything that you have not understood in this theta effect रमेश जी सुरेश जी अब्रार This one, Shrikant, is it this one? Yeah, so hold on to that. Let me complete Vega, then you will understand that because I'm going to explain it to you using some diagrams. Theta impact on far month is lesser than near month, Murugan. Opposite. You are saying the opposite. How close we can calculate time value of premium with options Greek? You don't have to calculate time value from options Greek. Greeks tell you the impact on the time value because of these parameters. टाइम वैल्यू अगर कैलकुलेट करना है तो प्रीमियम माइनस इंट्रिंसिक वैल्यू 8.09 कैसे आया 70 पैसे डिवाइडेड बाय 8.65 70 पैसे इज 8% 8.09% ऑफ 8 रुपीज 65 पैसे similarly 33 paise is 1.51% of 21.8. So if you see now, this is November, this is December, and this is April. Is April the farthest month? So if one day passes, right? So the November 12 will reduce by 8% for one day passing. December 12 expiry will reduce by 1.51% and April will reduce by 0.33%. So haven't we mitigated the risk of time decay? Yes, farthest month has least theta. So theta and time value are inversely correlated. More the time value, lesser the theta. The reason is more the time value, more the time for expiry. No, more the time for expiry, more the time value, more the time value, lesser the theta. Pretty close, Ashish. Pretty close. I mean, more or less they'll be with a factor of about 10% up and down, not more than that. If it is available, Dhirendraji. In India, it is not available. So I'll tell you one mistake that you will do in your trading. Okay. Now, since in India most of these stocks don't have far month options liquid, like you will not get 90 days, but you will see that okay section 1 में अच्छा है stock demand में आया है मैं call buy करता हूँ. That's what you will think. Okay. Now you will say अरे rule बोल रहा है कि 90 days out, but 90 days out available नहीं है. So then what you most of the times you'll do, you'll buy the front month. So अभी फरवरी बाय करोगे जबकि नेक्स्ट वीक फरवरी एक्सपायरी है, आप आज बाय करोगे और ये पूरा पैसा डोनेट करके चले जाओगे. So don't do that. If the rules cannot be met, there is no trade for you. And don't worry, right? I am not saying don't trade. If ऑप्शन लिक्विडिटी नहीं है तो फ्यूचर्स में ट्रेड करो उस टाइम पे. ट्रेड तो वेस्ट नहीं होने वाला आपका. ऑप्शन की जगह फ्यूचर में करोगे आप. और महीने के एनीवेज 10 से 15 ट्रेड मिल जाते हैं. So only 60 days you can take in certain conditions. Those conditions, once you start getting more and more experience, I'll explain. Don't worry. If you have hedged a part of your portfolio, for buying options, yes, Anand. अगर स्टॉक के साथ धीरेन्द्र जी आप हेज कर रहे हो मतलब पोर्टफोलियो के साथ, then generally what you do is, if you want to still hold a stock in your demat, you keep the hedge till we reach a higher time frame demand zone, and once you reach the higher time frame demand zone, you're expecting the stock to anyways bounce, and that time you cover up your put options, your hedge options. All right, okay, that's it. That is what is theta. Any questions on theta? Should I quickly cover row, because row is something that we really don't bother so much. So before lunch I'll complete row, and after lunch we'll complete vega, which is the most important Greek, and gamma. Gamma, again, most of the stuff is done. So we'll just go through row, and even if you don't understand row, you don't have to bother, because ये मेरे 5 साल में मैंने कभी रो के वैल्यू को एक बार भी मुड़ के देखा नहीं है, नीदर गैमा को देखा है. Now, rho measures the change in the options premium given a 1 point change in the interest rate. So, if the interest rate changes by 1%, the options premium will change by the value of rho. Okay, let's see. And कभी interest rate आपने 1% से change होते हुए देखा है क्या? Very difficult, right? At the most 0.5. At the most. Yeah. So the impact is not really that great. Okay, interpretation of rho: the more expensive the scrip, the greater the rho. Why is the rho is greater? Because if the scrip is more expensive, you will need more money, more the amount required, more the impact of interest rate change, isn't it? The longer term to expiration, the greater the rho. So basically an option that is August option versus a December option, the December option will have a higher rho compared to the August option. uh, uh, Maruti, which is trading at 7,000 approximately, will have a higher rho compared to Tata Motors. Why? Because Tata Motors is trading at 150, which is low price, and Maruti is trading at 7,000, which is high priced. Rho is a factor of both time and price. Positions that mimic long script have positive rho values, and therefore positive delta, or bullish positions will always have positive rho values, and bearish or short script positions will always have negative rho values. That's it. This is all what you need to know about rho. No, Amit. Positions that mimic short script means long put or short call. Aren't they bearish strategies? Short script is bearish, long put is bearish, short call is bearish. So short call and long put are bearish strategies which will have negative rho values. Long call and short put are bullish positions and they will have positive rho values. Right? Any questions here? Ramesh ji, Suresh ji. Abrar, Bhavya, Anand, Venkatesh, Satish, do you have any questions on this? Yeah, when you're taking a bullish position, rho will always be positive. When you're taking a bearish position, rho will always be negative. Meaning of mimic long script. Long script is bullish strategy, Arun. Yeah. So फिर कौन सा bullish strategy, bullish options positions कौन से है? Plus C call, long call and short put. They are all bullish positions, right? So that is why they will have. आनंद वैसे नहीं देखते. आनंद टोटल कॉन्ट्रैक्ट प्राइस मत देखो. What does a call give you? Right to buy. What does a put give you? Right to sell. Well, right to sell of what? The underlying, right? तो एक कॉन्ट्रैक्ट 5 लाख 8 लाख का है. अगर आप 10 कॉन्ट्रैक्ट खरीदोगे तो आपके लिए अफेक्ट होगा कि नहीं वो? That's it. No, you'll have to calculate historical Greek values. So Greeks, how are Greeks calculated? Okay, there is this Black and Scholes model to which you feed the options premium. So unless and until an option gets traded, you will not have the implied volatility and Greek values. Greek values are derived from option pricing. So that's why if you see this, I'll show it to you. Okay. Now, if you see here 10,700, these are traded, right? That's why you have a value of 15.92 as implied volatility. But if you go to this, now here it is not traded 9,700. Nobody is bidding or asking for that. So no trade, no implied volatility. Underlying script cost. See, script cost ज़्यादा है तो तुम्हारा premium भी ज़्यादा होगा ना? Your premium is dependent on the script price. मतलब Nifty which is trading at 10,600 and BHEL BHEL which is cheaper script will not have the same option value, right? Or row value. Alright. So everybody clear? Alright. Should we break for lunch now and come back in an hour's time? Yes, Anand, more or less. Okay. So those who have not finished day 3 quiz, you can finish it during lunchtime. Now all of you have to log out of the room and rejoin at 2 o'clock.